Good evening, Dan Fitzpatrick at Stock Market Mentor here, and I'm just going to revisit yesterday's chart of the day, which is Pandora. I swear I didn't move this stock, but I was talking yesterday about this volatility squeeze. Stock looked, a little bit like Netflix in that respect, trading sideways. And then what you want to do is you look for the first pop above the upper Bollinger Band that actually sticks. In other words, the stock actually closes above the upper Bollinger Band. And yes, you can get into it intraday when it looks like that's going to happen, but you just have to watch and understand that if the stock happens to pull back and close back within the Bollinger Bands, then it's really not a breakout. It's just kind of a little move up that didn't become a breakout. Here on Pandora, that's not the case. The stock did gap up and it just kept on going. And so, and I guess they have, more ears or whatever it is that they do. And so this stock could continue to run. Check out Spotify, by the way, if you think Pandora is really cool. Spotify is like, from the devil to the music industry. It's awesome. So check that out. But with Pandora, this stock could move for a while more. So if you happen to get in this trade, when after I mentioned it yesterday, I would stay in it. I would just let this thing run a bit. If you start seeing the stock start to close on a day, if the close is lower than the open, even if the day is up, if the close is lower than the open, in other words, where the actual box itself looks like this, the solid green box like this. If you see a box like that, that reflects selling. Even though the stock may gap higher, it reflects an instance where a lot of buyers come in the morning, but then there's enough selling to satisfy all the demand and then push the stock lower. If you see that type of thing happening, it's not necessarily bearish for the stock. It just, gives you a sense that there's more selling. So you want to take these profits. But the stock is up almost 10% in a day. And if you took the trade yesterday, again, from chart of the day, you didn't get that whole 10% because the stinking stock gapped up to $10.90 versus a close of $10.46. So it's basically like a $0.50 move that was missed. But still, the stock remains strong. I think it's going to continue to move higher. Just make sure you keep that, keep a trailing stop in place so you don't let a good trade like this turn into a loss that really makes you mad. So anyway, that's it for this video. Members get to the strategy session. I've got what I think are some real helpful hints for you for getting into this market and staying in this market. So anyway, have a good evening.